XRP to the USD. We've come down past the 236. This isn't actually lined up properly. Let me just draw this in properly. Must have done it in a hurry before. There's this other one here as well in the background. I'll just remove that because I don't even know what it is. Yeah, so we've come down past the 236 over here. We didn't go on the upside with divergence. We're going up towards the top side and managed to put in this top here without divergence, as you'd expect, seeing the ludicrous run towards the top side that there was. But we didn't actually come in with immediate divergence thereafter, you know, either, funnily enough. Looking at this, you can see that right the way up here, we managed to continually push these things towards the top side. So that was really healthy move for Thingy. Ripple, and of course we've, oh wait, what's the time here? 1 minute, 1 hour, 1 hour 7 minutes, 1 hour 7 mins for Ripple. So that's been really, really good. You know, we're obviously in an upward trend. In terms of retracement, we have gone past the 236, you know, and that obviously means something in itself. Because confusing lines on the chart there, so just getting rid of them. And we've come down, we've tested the 382. Now, so far, we've managed to find support at it and move towards the top side. Although you can quite clearly see the structure that you have on the go here. Now, you could name it whatever way you want, and I've been quite clear about not needing to care about what you name things in the world of technical analysis, since the names are mostly invented by morons in the first place, let's be honest. But you could call this a descending triangle, or you could indeed as well just kind of look at it with the general sort of structure here of this as being your neckline in any sort of twin to triple peak pattern, or any of that sort of jazz. It really doesn't make too much of a bollocks in difference. If you look down below that, past that point, then where would we expect to see the prices? Well, so if 52 fails, we could easily be looking to 44. If we draw in a measuring move here, measuring stick move, then obviously that actually takes you all the way down to the golden pocket, as you could obviously tell. So you not only would you be looking down at 44, but you could be looking down as far as 36. So what you have in between times is the 50 simple period moving average. If we were to do any of this, then obviously from a bigger, broader time frame perspective, that simply represents a higher low. So we've had a dramatic movement towards the top side. It was very much parabolic in its nature over those few days. Then we've gone towards the downside. We need to see this failing some of the negative patterns. Okay, we need to see it failing them. We need to see things like, for instance, this cross, this negative cross we've had on the DMI, which is very much a bad thing to be saying on this chat. Very bad. So this would need to fail, okay? Right, this movement that we've had that's just come in here as being like a head and shoulders on the RSI, depending on where you want to draw the head and shoulders in, doesn't really matter. We've had one from here that played out, or we've got one from here that's yet to play out. We need to see these ideas fail, and the neutral line, if recalled upon to operate as support, we need that to happen. Otherwise, things do start to look fairly stinky, and these movements down the way represent nearly 50% off the price. Or what is it it would represent? We're talking about huge amounts, like 40% off the price, somewhere between 30 and 40% off the price if you were to do that. So obviously that'd be catastrophic for 9 out of 10 traders, right? So that's why that would be bad. But in the overall face of things, you'd still say that woohoo, we're in an upward trend for Ripple, and of course we are. So I would be wary about that. And as you can see, the volatility is obviously kicking back in. On the weekly time frame, we're coming in here. We haven't put any higher lows for ages. Where's that going to happen? So it could happen here. Now it could happen at any point, but if it were to happen here, what would that look like? Well, not like it's really got that to happen for a reason. Looking back over to the left, there isn't much of one. There's this inflection point here and here. Well, I suppose there is one. You could say this is a right on one, but we're a little bit, yeah, we're right on one at the minute. So there is the chance, you know, if we want to see things turn around, there is the chance that it could happen, right? And it would happen from here, perhaps, right? If not, then we're going back down to visit that 382 at the least, you know, down there at sort of 56, which is a solid 1 penny off the price. But, you know, if not, that's where it would be. We need to see this operate as support for us. If we don't see that happening, then obviously we're moving towards the downside. What is there between this little bit on the left, really, where we have this wick, this inflection here, this one here, this one here, this one here? What else is there, you know, when you're looking down the way and it only lines up again with these Fibonacci retracement points we've already discussed? So you're only really seeing anything coming in again at 44 and then 36 thereafter in that there. So that's your technical analysis on that one, really. Obviously in an upward trend, but this of course doesn't actually even have to act irrationally for you to lose your solvency during this trend. In terms of how much that's going to actually operate as your friend, I couldn't tell you. In terms of the 1 hour time frame, if you're looking for a trend therefore, then actually over there since the 24th of November we've been in a downward trend overall. Well, actually maybe not. not, given that we've not taken out this low yet. But, you know, we've certainly been trending towards the downside side since the 30th of November, and doing it largely without divergence. So, you know, nothing really looks all that good. But of course, could it start looking good? Yeah, it could. It could start looking good. We need to take out, we need to maintain 56, take out these previous areas. We really need to take out the highs of this, we need to take out that 236. That comes in perfectly with this little head and shoulders movement here. You can see the shoulder, the head, the shoulder, the breakdown, the measured move, bringing us down there. The resurgence, not taking us back past our shoulder, moving on down the way, forming this downward trend, having this potentially descending, broadening wedge on the go. You'll remember then, if you're looking at this in terms of that sense, this is obviously very low time frame stuff, but if you were looking at it in that sense, if this isn't going to be a channel for you, which it really kind of could / should be, I don't know, then, you know, the target for that obviously comes in at that 45 area, for instance, towards the top side. You're looking up towards this area where you let's make it like that instead for the crack, right? Let's just do it like that so it actually narrows slightly. You see, it's really, it doesn't, you have to force it in. What about log? It's nicer on log, isn't it? That's kind of a wick there as well, so just wicked outside of it at that point. If I use bodies, I can get away with this. Cool, yeah, sound. So that's what we're looking at there overall on this one. Sort of taking out 58 and moving up into the 60s gives us a chance of that 63 area. 63 needs to happen, taking out the head and shoulders area over here for us to get past any of the recent sort of liquidity in the market, which is everywhere between the blue serrated line and that green line. Movements towards the downside, taking out 52, very much negative, could be looking down towards as far as 45. If I wanted to have any saving grace come in here, it would try and pick in the price at around about 49 or so. Gives you easy to manage risk longs and shorts and everything all around this area. Really, in terms of the movements that we're seeing here, you can see that any given inflection point, if you want to talk about another thing that I never really talk about much, so here's another lesson for people today. You know, just think about things rationally. You're allowed to think about things rationally. Believe me, you are. If you were to take this here, clone it, this top line, and clone it, and talk about the areas where, you know, you come up here and we've seen the majority of the bodies closing, and then we've seen these wicks going up past it. Structurally, since the 24th of November, on the hourly chart, you're looking at a difference between 57.3 and 58.9. So any given time, really, you're looking at a difference of, say, sort of around about 2.5%. So if you were to put your stop in around about, you know, any of these, it doesn't even need to be, you know, you can talk. I hope you get the point that I'm trying to make, that I can't really be bothered even finishing my sentence for. But you can, in terms of managing your risk, you're looking at in terms of the movements that you get whenever it actually does move versus the periods when it's inflecting, and your risk tolerance at any of these zones as being minimal versus where you are. So you can just manage your positions wisely, right? Right towards either direction, and obviously getting in, you know, here and here and here and here for moves that then, you know, hoping for it to go up or hoping for it to go down or hoping for it to go up were really kind of a little bit dumb, right? But then movements in those areas actually hoping for it to go back, go up there, go down there, follow it through was not so dumb. And what you're looking at in terms of the reward is 13%, and that just adds up, you know, 2 to 3% risk for a potential 10 to 13% gain. That's 5 to 1. I mean, how much of a genius does it really take to be able to start to fit these things together? You know, I don't think it takes a very big one. I think that, you know, I'll hammer into your heads over time, okay? I'll hammer it in there, don't worry about it. There's your XRP technical analysis. I hope that's somewhat interesting for you, buddy. I hope it's at least something interesting, because if it isn't, then don't know what to tell you. But I agree with you, it's gold, right? Looking towards this one then, this is of course XLM, the stellars, the stellar mabobs, the stellar bobbies. Looking at the 1 hour time frame, we're kind of seeing this structure here where you have this low coming in with this downward slope there. That's not ideal. What's it look like on the 24 hour time frame? Not ideal. Is this the same story as what we're looking at with regards to Ripple? I would say it is. it's exactly the same story. Depends on where you want to draw that in from. Take it from our previous low before the actual jump up. 618 has almost been hit, but not quite. This is kind of looking like more negative than Ripple, but then is it giving us a little insight into how Ripple could perform over the next wee while? Maybe. Is this a bear flag? It could be. That would be your most positive case scenario for you, or a bull flag. Sorry, this would be a bull flag. I mean, sure, it could be. That would be your flagpole, and we already mentioned that in terms of the Ripple pricing. So you could be just sort of as a casual glance looking up. This is log. If you're wondering why that shrank so quickly, then it's because it was on log. So down here that is that length, up here that is that length on linear. Log, however, because we're talking about dramatic differences in prices, up here it looks like that, down here it looks like that. It's ridiculous. Okay, so towards the top side, then you're looking in terms of like 32. If you did get a movement outside of that, I think that would be kind of generous, to be perfectly honest with you. 26 would be far more realistic. And you're still talking about a 20% difference between there, where you've got the flexibility to trade however your heart desires. Let's stick on the moving averages and then the Bollinger Bands, and I'm no doubt you could be able to translate what I've said on one chart to the other in terms of what you're looking for here with this one. There isn't a 200 period movement average on this. Why is that? Should easily be. XLM's been out for more than 200 days. XLM USDT. There we go, that's better. In terms of where I drew this in before, the 618 actually comes in down there towards 9.8 to 10 cents. That's where I'd be looking for if we see continuation, which we've so far had, i.e. if this doesn't perform as a bull flag, which it could do. There's plenty of risk to reward moves that you could use in this area very easily. I'm not sure which way around that was. I can't really be bothered looking at it. Here you can see golden cross overall, not tested this. If we did come down and test the 50 period moving average, that would put us in at 12-13 cents or so over the next week or two, or a few days, maybe even could even happen over the weekend. If we were to come down and test the 200 simple, that would put us in at the golden pocket. So both of these Fibonacci lines, which are of course significant, are rapidly being approached by these two moving averages just here in terms of if they wanted to test them post cross. Okay, doesn't need to test both of them, certainly doesn't. Looking over here, we saw a test of where we saw a golden cross. We did come in and test the 50, go on for higher highs, then come back, test the 50 yet again, and then test the 200. So if we came in here, tested this, went for higher highs, and came in and then tested the 200 thereafter, could that make sense? Yes, it could. Huge amounts of trading to be done in the meantime, but that's incredibly speculative. I just wanted to point out the fact that you don't need to see things cascade necessarily upon towards the downside. Now, am I bearish on this? Most certainly not. Don't want to be seen, don't take me wrongly or whatever. We have this upward sloping trend line, so I can say that I'm bullish on this right up until the prices go there, which is in effect saying that I can say that I'm bullish on this until I've seen a 43% movement in price. Does that make any sense to you? No. So instead, I'm not going to try and impose a bias onto these charts, and that's what this is. This is this FOMO-free, bias-free technical analysis, and that's how you can make those statements. So am I bearish on this one? It's a funny one, that, isn't it? It's a hard one to answer. This has got this channel towards the top side. Cut it, shape it, drop it, sniff it, smack it, whatever way you want. I don't particularly care. You could even classify this as being some sort of ascendant broadening thing. Again, like I say, don't particularly care. It makes no difference really. It really ultimately doesn't, because what you're talking about is resistance and support lines on a diagonal basis, and that's all that is. Don't make things more complicated on yourself than they have to be, in which case you're looking between either of these zones. If we see a turnaround at 10, if we get a movement down the way, oh boy, what a good buy that would be, with the potential for tripling your money, getting a 300% move, up towards the top side, 3x in terms of spot trading, and that would be insane. So am I bearish on this one? Hard question to answer, because what we're doing right now is living within a bull flag of a movement towards the top side, which is really weak and looks like it could easily capitulate. That's what we're looking at. Okay, cool, nice one. I'm going to check in with the chat here and see. KDoc says he concurs with TradeSpawn. TradeSpawn said we should have a drinking stream. Okay, cool, let's do it.